Hello, good evening and welcome to Business Live. Coming up in this bulletin, Bank of Ghana justifies its decision to hold an emergency monetary policy committee meeting, insisting the economy is showing signs of significant improvement with a positive outlook. We shall be discussing the verdict of the central bank with business strategists and financial analysts. Also in this bulletin, IC Research forecasts Cedi to end 2025 against dollar at 11 cedis 45 pesos on the interbank market. We'll be telling you more. Plus, CATS International calls for a passage of competition law to prevent cartels from hijacking the 24-hour economy policy. We are live with its West Africa Regional Director for some conversation. We have details of this and more coming your way all in a moment. Please stay on. Thanks so much for your company. I am Pius Kojobaka, and looking at our stories. The Bank of Ghana has justified its decision to hold an emergency monetary policy committee meeting on Thursday, July 17. Now, according to a statement, the move is part of its strategy to be proactive and responsive to policy formulation in line with the country. Now, the Bank of Ghana's decision to hold an emergency meeting ahead of the media budget of the 2025 estimates had been received with some mixed views by some industry watchers in the banking and financial sectors. But the central bank maintains that the economy is showing signs of significant improvement with a positive outlook. Let's have a conversation on the back of this. Joining us via phone is Daniel Amatenin Esquire, is an economist and also a private legal practitioner. Pleasure you could join us on Business Live. Very sure you have seen the statement issued by the Bank of Ghana following the outcome of that emergency meeting last Thursday. Your thoughts about the outcome of the meeting? The committee says the economy is showing signs of improvement by way of economic gains and, of course, positive outlook. Your thoughts?
Yes, I perused the statement put out by the Bank of Ghana, and I largely agree with them that the economy is actually improving. You know, I have even indicated it, even prior to the election, in respect of the recovery within the domestic economy, but it has improved significantly within the quarter of the year 2025. But there's still a need for us to tread cautiously because of the uncertain global, phenomenon that could have a very significant impact on the economy. Okay, so largely I agree with them. There has been appreciation of the local currency. Of course, IMF have issued a caution. It was a caution I have indicated earlier that it is quite artificial, and we must allow the forces of demand and supply to determine the value of the local currency, and that is where we can have a sustainable value of our local currency. Inflation has significantly improved to 30.7%. Almost all the macroeconomic indicators are showing a very positive signal. You know, the GDP for the first quarter improved. You know, the economy expanded by 5.3%. You know, we have a non-oil growth of about 6.8%. So, indeed, almost all the indicators are actually giving us a very positive signal. And going into the next half of the year, if we are, as a nation, being able to close the fiscal year by maintaining an improvement or improving upon the performance, then we should be able to confidently say that we are on the verge to totally recovering the economy from a downturn performance. So to me, they are very quite progressive performance, you know, put out by the Bank of Ghana. But the critical question is still at stake, that the policy rate at 28%, making the cost of capital quite expensive within the sub-region. So there's a need for the Bank of Ghana to further work hard and ensure that we have a policy rate that will ensure that cost of capital is very competitive, that will allow businesses to go for more capital to expand their production base, and that's the only way they can create jobs and add value to their produce, and by way of attracting more inflows into the domestic economy. And
it's good you've mentioned the policy rate. Looking at the verdict of the MPC, do you think that indeed that will also translate into, you know, a reduction in the policy rate when they next announce the new rate?
Certainly, there's that possibility. If you listen to the tone and the analysis so far by the committee, it appears that there's that likelihood that they may further reduce the policy rate from 28%, you know, and if that is done, to me is to send a signal to the commercial banks and then making the cost of capital quite competitive, and that will be a very positive news. So, but answer you in a very basic manner, I'm of the view, considering the tone of the analysis, that appears that they may use the policy rate.
And Esquire, let me appreciate the signal this would send to the investor community and, of course, the economy at large. Yes, you've mentioned the signal it will send to the commercial banks.
Yes, certainly it will. If you recall, even at the time we went to the IMF, was where the confidence of the investor confidence started increasing. Okay, and now that almost all the indicators are showing a positive sign, if the Bank of Ghana is able to reduce the whole thing, that may motivate investors further to do business with our economy. Meaning that when they come into the economy, they will be able to borrow from the commercial banks at a very competitive rate to increase their production activities. So, to me, it's quite a positive signal to the investor community. And my view, respectfully, that if we are able to walk this tone consistently with all the discipline that it requires, then we should be able to attract more inflows and more investment into the domestic economy.
Very well. Thank you so much, Daniel Amatenim, for your time, Esquire. I truly appreciate it. This is an economist speaking to us here on Business Live. I want to stay a while longer at the corridors of the Bank of Ghana because they have extended the forex repatriation period for exporters from 60 to 120 days. And this was revealed by the Minister for Trade, Agribusiness and Industry, Elizabeth Ofusue-Jare, at the Trade Forum, which gathered exporters and manufacturers. More in this report.
The forum gathered trade associations, exporters, as well as players in the manufacturing sector. At the forum, the Minister of Trade, Agribusiness and Industry, Elizabeth Ofusue-Jare, announced that the Bank of Ghana has extended the foreign exchange repatriation period for exporters from 60 to 120 days. This is to enable exporters ample time to sell their goods and repatriate and foreign exchange as mandated by law.
The repatriation of export proceeds are the 60 days.
I was petitioned that the 60-day repatriation period was too short. I engaged Bank of Ghana and they have agreed to their request.
If the Bank of Ghana export, I'll commend the Bank of Ghana.
We are all committed to boosting exports. This action taken by the Bank of Ghana will make our exporters competitive.
Within 120 days.
In response, Eric Defoe, chair of the Economic Committee at AGI, commended the move.
You had situations where people took goods out and they couldn't repatriate the proceeds. And now it's been extended, so instead of a short term for you to repatriate, the period has been extended, so you can continue exporting until the 120 days catches up with you for you to repatriate your first export.
Nora Bannerman, a government exporter, expressed worry about Ghana losing business to other African countries due to its slow pace of policy implementation.
The slow pace and assuming that the whole world is waiting has been to the disadvantage of Ghana. Because we come up with great ideas and we're very slow at implementing. So neighboring countries, even other countries, they take advantage of what we have. I gave the example of Ethiopia. I gave an example of what is happening next door to us, and so on and so forth. And once these are well established, they draw the business to their countries. It's so close, it's Africa as far as they're concerned. So if you're talking about taking advantage of AFCFTA, we need to be looking at our infrastructure. We need to be looking at patenting. We need to be looking at grant and debt to support industry.
The Ministry of Trade, Agribusiness and Industry says it will continue to hold periodic meetings with industry aimed at making Ghana an industrial hub.
The Ghana Cedi is expected to end the year against the dollar at 11 cedis 45 pesos on the interbank market. That's a forecast from IC Research. The following report has more.
According to IC Research, one of Ghana's leading economic research firms, it expects enhanced price discovery in the months ahead as foreign exchange market rates are allowed to converge. The research team says it expects the interbank US dollar Ghana Cedi rate to close full year below its estimated fair value. It said there is a possibility for the interbank levels to steadily rise towards its revised 2025 midpoint forecast of 10 cedis 95 pesos to $1, with a forecast ceiling at 11 cedis 45 pesos to $1. Presently, the local currency is going for 10 cedis 40 pesos to the dollar on the interbank market. It is selling at more than 12 cedis at the forex bureau market. Continuing, IC Research said, although the International Monetary Fund applauded Bank of Ghana's measures to study price levels and exchange rate, the IMF board appeared concerned about continued strong forex market interventions by the central bank.
And let's touch on this story we are following up for you. The CAT International is advocating a competition law to guide consumers' interest in the implementation of the 24-hour economy initiative. According to CAT International, such a law will prevent cartels already operating in Ghana to shortchange consumers, thereby increasing the plight of ordinary Ghanaians. West Africa Regional Director of CAT International, Apiakusi Adumaku, joins us via Zoom for us to have a conversation on this story, on the back of this interesting revelation they are making. Thank you so much, sir, for making time to join us here on Business Live. And I'm wondering how crucial such a competition law will be in assisting Ghana or Ghanaians when it comes to Ghana's 24-hour economic policy, and how, again, export ambitions can be achieved.
Okay. Good evening to your viewers. I think competition law is the law that tends to regulate the conduct of businesses in a way that no business or no entity will be able to take advantage of the others. When you have a competition law, there's no element of abusive monopoly or price fixing. Currently, Ghana does not have a competition law, so some businesses may decide to agree and fix prices. When prices are fixed, it means that people will have to pay more for a product that could have been sold at a lower rate. And so now that we talk about 24-hour economy and accelerated development policy program, government is looking at this is an industrial policy. And if you do not have a competition law, there could be some few companies that can form cartels and restrict the supply of, let's say, essential commodities that others will need. And in the long run, consumers will have to pay more for those things. And I want to say that under the AFCFTA, every member country in Africa is required to have a competition law. And in Ghana, in this year's budget, the budget also indicated that the governor, the Ministry of Trade, will table before Parliament the competition law as well as the consumer protection law. And once we have a competition law, you see that the market to become efficient. And let's take, for example, even in the telecom sector. Currently, we don't see any competition in the telecom sector. And with competition law, most of the issues that we have in the telecom sector could also be addressed. And we are very hopeful that once the law comes into being, Ghanaian consumers and even businesses, because competition law even has more impact on business than consumers, because if, let's say, as I mentioned, around some sectors have abusive monopolies. And there's nothing wrong for a firm to be a monopoly, but competition law is against an abusive monopoly or an abusive dominance. If you decide to increase your prices in a way that, because you don't have any competitor, that one competition law can also look at it to see whether you are abusing your monopoly.
That's fine. That's fine. So, in essence, this is supposed to support protect the consumer, but largely there's been this concern that, look, already we are struggling to pass the consumer right bill. Now you are also promoting or calling for the protection of consumers by way of introducing this competition law. Do you think that will see the light of day, and are you positive this will materialize?
Yes, I'm very positive. When you look into the NDC 2024 manifesto, it was stated that, and in this year budget too, government has also indicated that they want to pass these two bills. And let me add that this bill has been on the pipeline for the past 18 years. And I'm happy that, again, it is going to see the light of the day. And Ghanaian businesses and Ghanaian consumers cannot wait to see these two bills passed.
Do I still have Apiakusi Adumaku on? If I do,
yes, I'm here.
All right. If I do, I want us to still focus on our consumers, because already the PURC is, making efforts to increase utility tariffs, and I know you have serious concerns about that. What are these, and if you can share with that?
Okay, so I think we've had a lot of concerns about the PRC decision. One of the key issues was the inflation rate. In determining the price of electricity, PRC considers some factors. One is the dollar, the Cedi dollar rate, inflation rate, as well as the cost of the input material, that is the natural gas and the crude oil. We know that PRC, in determining the price for the third quarter, they projected inflation rate to be around 20.4. At that time, inflation for the month of May was 18.6. And if you look at the historical data since the beginning of this year, inflation has been trending down. Now, the last inflation rate for the month of June was 13.4 or so. And so essentially, PURC did Ghanaian disservice by using a very wrong figure. And I think that they will need to explain to Ghanaians how they arrive at a projected rate of the 20.4 as inflation rate. So it means that we are actually paying more for utilities because of this wrong projected rate of inflation that PRC used in its computation.
But what would be your reaction to people who say that, for example, the tariff adjustments are part of the IMF conditions to get debt in the power sector resolved, and also the PURC must be allowed to impose the tariff? What do you get to tell them?
I don't believe that. I mean, tariff setting in Ghana is a scientific. It follows rules and regulations. That these are the factors: cost of gas, exchange rate, and also the rate of inflation. In the formula, there is no IMF variable inside it. And if we shouldn't be blaming the IMF, I think that the IMF is maybe concerned about the debt in the energy sector. The debt in the energy sector needs to be retrieved, and not necessarily by using a PRC to cause us to pay more. I think that PRC needs to be very clear. If they want to have a variable of an IMF in the formula, they should let us know, and we'll look at it.
In the event that they go ahead to increase the tariffs, what becomes of CATS International? What will you do?
Well, we will look at it and also look at all the possible options. But once the variables are going down, once the Cedi is stable, cost of crude is coming down, and inflation rate is down, there is no mathematical basis for tariff increase.
West Africa Regional Director of CATS International, thank you so much for joining us here on Business Live. This is still Business Live. We have a story for you. Hello, welcome back to Business Live. Some stakeholders in the oil marketing industry are pushing for the 1 Cedi levy applied on premix and other heavy products. Oil marketing firms this Wednesday started applying a levy, a move that has resulted in prices going up by almost 10% per litre. Chief Executive of the Chamber, Dr. Patrick Ofori, says applying the levy on all products will help promote healthy competition among all players.
Our concerns were the needed engagement and then the deliberation that we would have all done. One of the key things that we would have proposed is that you cannot levy the diesel and then petrol at the expense of MG or marine gas oil. So we're pushing that all those products should experience the full rigor of all the taxes and levies that are applicable. That will prevent people from engaging in any form of illegality, moving the product, diverting the product into filling station, and then government quest to rake in the required revenue is not done. There is another thing that government needs to, it's about time that government needs to reconsider. Why do you even tax a cleaner or something that we have adopted as a transitional energy, LPG, gas, and then give subsidy on premise fuel, which is more or less a dirty fuel. We managed to advocate and push for heavy fuel, HFO subsidy to be taken, and we are also taxing this government that has even created a ministry in charge of energy and green transition to ensure that the time that we subsidize any form of dirty fuel should be a thing of the past.
And that's our package by way of Business Life. I am Pius Kojobaka. We have more for you when you log on to myjoyonline.com/business. Beyond the Numbers is next.